on TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today we're lucky to be joined by Tom Waterhouse from Waterhouse VC. Tom, thanks very much for hopping back on the show.
Thanks, Chris. Great to be on.
Now, some of our viewers will recognise you from your entrepreneurial days running an online bookmaker, but since then you've absolutely shot the lights out with Waterhouse VC. Tell us a little bit about your investment strategy at Waterhouse and what makes you guys unique.
Yeah, look, so obviously the family's been in gambling over 100 years, and I was a on-course bookie, then had TomWaterhouse.com, then ran William Hill's business, and saw that the actual profits in the trillion-dollar gambling industry were going away from the operators, the likes of Tabcorp, Sportsbet, Ladbrokes, and so on. And it was really the supply layer of the industry that was making a lot of the money and the large margins. And so when William Hill sold to the Stars Group, I had a 2-year non-compete in 2018 and started up Waterhouse VC, really just focused on that layer of technology that supplies the likes of Tabcorp, Sportsbet, and so on. And what we realised when we started the fund, we have an advantage in understanding that technology layer, but we combine that with buying options in these technology companies. So the way our fund works is we go around the world and try and find a great tech supplier. It might be supplying esports data or racing data, or build mobile apps or platforms, or vision supplier, or a voice betting solution, anything that supplies a technology service. We find that company that has 1 or 2 contracts, maybe in Eastern Europe, and we buy an option in that company, hoping that it can expand to getting contracts with all the large US operators, Australian operators, UK operators. And if it can, our option becomes very valuable. And if it can't, well, we've wasted the money of acquiring the option and some time on it. But we have large payoffs if we can find the right technology suppliers that are going to expand. And we've been pretty good at that. And that's what we focus on. So we spend our whole time going around the world to gambling conferences and speed dating. So I'm in Lisbon next week and been in Rio and US and UK and Amsterdam and everywhere under the sun, just going and looking at these suppliers. And it's pretty interesting. I love the space, and obviously it's the only industry that I've ever been in and know it pretty well.
And while it's really specialised in terms of what sector you look at, it's pretty broad in terms of the different asset classes you're prepared to invest in terms of listed equities, private equities, and even some crypto stuff. Was it something that was important to keep part of the flexibility?
Look, what we realised is we actually didn't need much money to go and acquire options. So the most we've ever paid for an option in a tech supply is 30,000 Australian dollars. Wow. So we sat in a lot of cash. We've got about 75 million in the fund. And so what we said to our investors is, we're sitting in your cash. We don't need that much money to buy the option. We don't know what to do with your money. Do we put it in bonds or gold or term deposits? And so what we went to our largest investors and said, look, this is what the family's been doing for the last decade, is following the 13F filings of the best performing long-only funds in the world. So the likes of Berkshire, Bridgewater, Tiger, Third Point, Apollo, and so on. We go through those filings every quarter, and then we apply a few proprietary screens. So trading under like 20 times PE, growing revenue greater than 20%, very little debt, over 1% of their portfolio, and we apply those filters, and then we come up with a handful of companies, and then we evenly weight against those companies. So our average PE ratio of the companies we're in is 13 times, median growth rate's 28%. They're ultra conservative group of companies, and since we started doing this as a fund, we've outperformed the S&P by 11.8% with just those positions. But what we're really trying to do is perform in line with the S&P with less risk. And basically we park the money there and spend all our time finding options and acquiring options. And we sort of think if we just park the money in high quality US stocks and spend all our time finding great option deals, we're going to be very high performing, hopefully, because we'll let the money compound in line with the market, and we'll get hopefully our outperformance because in the industry we know and understand. and hopefully do it with quite low risk because we don't pay a huge amount for the options. And basically we say to our investors, the whole thing is if you see quality option deals continually coming through, hopefully we're going to be a high performing fund. If you don't see quality and consistent option deals coming through, we're going to be a boring US equities fund. And that's basically how we think about it.
And what stock did you want to talk about today?
Look, we just did an option deal with what we think is a very exciting company, an Australian listed company called Racing and Sports. So the ticker is RTH. We've followed the company for a long period of time. My background is really in, it's obviously in bookmaking, but it's also specifically in horse racing. And we love businesses that have got something unique, and we believe they have something unique. They have proprietary data set on horse racing that they've had for over 25 years. Gary Crisp has been an industry leader and very, very switched on in the respect of horse racing and compiling data. His son, Stephen Crisp, CEO of Racing and Sports, also got an amazing understanding of the industry and been speaking with them for a long period of time, and we're able to come up with a deal where we bought a 2.5% stake in the company at a discount to their VWAP, 15% discount to their VWAP, and we got an ability to get another further 2.5% option at $1.40, and then another 10% based on them reaching certain performance milestones up to sort of between $1.68, $1.89. So we think that business hopefully can grow. Hopefully we can have those options in that company, and we're long-term investors in a business that we think supplies critical data to the racing industry. And we think that racing has a big role to play in the global betting markets, because many of the global regulated betting markets don't have online gaming approved. So racing is a great betting product that goes 24/7, and also is a great product in the growing crypto market of operators that many of them are yet to have a great racing product. So we think Racing and Sports is a very exciting company and definitely at the forefront of racing and racing data.
And so is it fair to think of RTH as sort of a white label offering that online bookmakers can then use as their back office and just focus on their marketing, or is that simplifying the role that they play for online bookmakers?
Look, this is really why we like the supply side of the gambling industry, because to your point, it's actually hard to put it in a box of what exactly companies like Racing and Sports do. Racing and Sports does many different things. So it supplies data to racing bodies. It provides data to bookmakers, so they have up-to-date racing data. It provides racing and data to the breeding industry, to professional betting syndicates. It has quality racing data that many different types of operators can use. It's building a betting platform that can be to like an operator can come and use their betting platform and mobile app, so they can basically have an in-the-box betting solution. They also have the ability that they are doing managed trading services. So they did that deal with Stake recently, where they give you a racing product and also the ability to trade that product for you. And then they have several different bits that they're working on that they basically got a very detailed solution for the overall betting industry, but specifically on horse racing. And they're a mix between a data and a technology company, which is very interesting for us.
And talk us through the recent partnership with Stake. So for those that don't know, Stake run an online crypto casino, which is in the sort of opaque, unregulated market where people use crypto to gamble on casino type games. So they've branched out into the partnership here with RTH. Talk us through what that partnership looks like and how material you think that can be.
Yeah, look, it's amazing that you would never have thought in the beginning of early 2000s that the incumbents like a William Hill, Ladbrokes, Coral would be, or Tabcorp would be disrupted in the way that they have been. They're still great operators, don't get me wrong, but who would have thought that as basically a startup, Bet365, the Coates family, who may have had 3 betting shops, would be the global giants that they became. And what they did is they used technology and moving fast and creating a great user experience to be able to bet in play, to have great deposit functionality, unique marketing. They were able to tap into those large land-based operators' database and create a way that the users really wanted to bet with Bet365, and it forced the the likes of those incumbents to have to accelerate their tech development and offer a product either as good or nearly as good or better than Bet365. And so they changed the game 20 years ago. What we've seen over the last 4 or 5 years is these crypto operators have changed the game again. So they've made it much easier for customers to deposit, to play, to get verified, to get their money out and in. The variety of different products, the way their marketing is different, the way they engage with their customers are different. And by changing the user experiences, as Flutter mentions in their annual results, it's all about the flywheel effect. So if you can create a better user experience, you can create greater lifetime values and higher value per player, you can put that higher value per player back into better user experience, which basically flywheels again into creating higher value for the customer. So Stake, Sportsbet.io, Shuffle, they've really changed the game of what betting operators are now doing and the product they're offering. And the interesting thing is in that space, racing hasn't played the same role that it has played for the traditional operators. And we think that there is significant growth for racing. It's such a great betting product. It's high margin, it's frequent. It's really in many ways built for betting. And Stake Deal appears to be going very well for racing and sports. I was really impressed with their last results that just came out. As a business, they're growing revenues strongly. And we think that it's hopefully just the beginning of crypto operators taking racing on and racing being really part of their core piece of their product offering. And if that's the case, then racing and sports has a large role to play in it. And I think it's got many reasons why racing will take off for those crypto operators.
And I guess the advantage for them is not so much that they're crypto operators, it's that they operate in unregulated markets. And you see the regulation in countries like Australia almost strangling the traditional operators. Do you think the advantage of being in an unregulated market for gambling is just going to get bigger and bigger as governments around the world look for ways to increase their tax base?
Look, it's in terms of what they are doing. Yeah, I think crypto operators is probably the wrong word. Is that they've just made that basically ease of payment use across multiple jurisdictions is much easier with them, whether it's in crypto or another form. If you look at the largest operators in the world, they operate it in their license in a regulated area, but every single jurisdiction has different requirements. So it's hard to say that one particular operator is completely regulated in every market, because some markets are different to the way the UK regulates and Australia regulates. In terms of there's a general trend to regulation now. You've obviously seen UK was the first to open up. Australia was very early in terms of online regulation. US also. But what has happened is that they have not completely opened up regulation in terms of, in the UK, you can have online slots or online pokies or roulette or your in-play sports or your racing product. You can have a complete offering in the UK. In the US, in 8 states, you can have that complete iGaming offering along with your sports book and your race, or well, to some extent racing. In Australia, you can have pre-match sports bets and you can have racing, but you can't have any slots or any casino games online in Australia. Now, in Australia, only a quarter of the gambling dollar is lost on sports betting and racing. So 75% is on casino and lotteries. So, or pokies is now classified as casino. So that 75% is only land-based. Now, to think that after COVID that there is not significant online adoption, I think is probably misguided. And that online adoption is going to unregulated players. So I think that the journey that regulation is going down is they want to regulate, they want to protect users, put in harm minimization. They want to tax operators and make sure that the money's staying within that jurisdiction. But I think the key bit that regulators probably will now look down the path of is we have to ensure that when we regulate, that operators can offer a user experience and customer experience that doesn't push customers to go to unregulated players, because really you want them with regulated players, that you have the problem gambling measures in place and you have the taxation in place for governments. And so I think that that's that's probably the next phase of where they go down, which is, it's
because it is possible.
always changing.
It is possible to almost increase taxes on regulated companies, but decrease the total tax revenue if more and more goes to unregulated outlets. Is that fair?
Yeah, well, I think this is we more focus on sports betting and racing with our fund. We don't focus at all on land-based casinos. But I've just seen, in terms of what's happened with the casinos, there's been such focus on these land-based casinos in Australia, but they're heavily taxed, and I assume have got like lots of player protection and all of the loopholes they've got to go through. But call it if $15 billion or $20 billion are lost in pokies and casinos in Australia, well, I think a big chunk of that must be going to offshore non-regulated, which haven't got any player protections and no taxation. So they've got basically regulation and restriction going against them, but they've also got headwinds against them, that there's online adoption. And on a cold, wet, wintry night, and you want to go and play the pokies, are you going to your local RSL or casino, or are you going, oh, well, I'll just go online to one of the 1,000 operators that you can access online, So that isn't any good for Australians, both from making sure they're protected and also from Australians making sure we collect the tax. So I think that's, in the offshore operators can only exist because they can offer something that's customers want. If the customers didn't want, and they had that experience, the user experience that's top notch, well, they're going to stay with local operators.
So let's put a bit of meat around the numbers, Tom. Just in terms of how big the addressable market is for RTH, have you put some numbers around how big that market is, and just how sticky potentially you think their customer base is going to be?
Yeah, look, I always think the supply side of the industry, the revenues are invariably quite sticky, because once you're in with an operator, you're in the ecosystem. And so it's quite rare that you actually get put out of the ecosystem, because the operators are looking to increase revenue more so than they're looking to take out costs. I remember CFO William Hill basically say you can't cut your way to glory. You've got to increase revenue. So there's always a focus on revenue. So if you're a supplier and you're pretty proactive about trying to find ways for them to generate revenue, it's quite sticky. Now, in terms of the addressable market, this is probably why we run a fund and acquire options. Is we're always blue sky and go, oh, it could be anything. I think racing has such a large role to play in the fact that there's only a handful of states in the US that have got iGaming, and the rest haven't. So there's a big product gap in the US because NFL, NBA, and like baseball don't run all year long and aren't wall-to-wall products, so they need filler product. I think in the crypto space, there's going to be massive adoption of racing. I think that globally, that the easier with technology of making it easier to be a bookie, that there can be a much larger of adoption of people going, oh, well, I'd have the technology ready to go. I'd like to be a bookie. Like when 50, 60 years ago, there were hundreds and hundreds of bookies at Flemington, and why can't there be hundreds or tens of thousands of bookies online? I don't, if there can be hundreds and hundreds of just one race course 50 years ago, if you've got the technology and you've got the solution right for them, and each has slightly different product offering, I don't know how, but I'm blue sky all the time. That's why we run a fund. We're acquiring options and hopefully find the ones that can grow dramatically. Now, racing and sport, it's when you're not in the business, we're investors, we're long-term investors. To me, to know how sticky certain bits of it are, or whether they have the same outlook in terms of blue sky, I don't know. But the reason why we like being a shareholder in the company is we really think that racing it's underestimated by the market, the role that racing will play globally, and yeah, we think it's a great betting product and are going to be around for the long term and needed by the operators. It's a high margin, regular product.
Well, it's been a really strong performance today. Congratulations on how you've structured the deal and how your fund's performed so far, and look forward to getting you back on the show again soon.
Thanks so much, Chris. Thanks.
And that's Talk Your Book for this week. We'll be back to do it all again this time next week.
You're watching Ticker. We'll have more in just a few minutes.